Hello, I'm David Frazier, the President and Chief Market Strategist of Frazier and Mayer Research, LLC, the providers of Investors Monitor and InvestorsMonitor.com. And welcome to our weekly internet TV show where we strive to tell you everything that you need to know, but nothing more about factors and developments that are likely to affect the value of your financial market portfolio. Keep in mind that one of our major goals here at Frazier and Mayer Research through our various financial market publications is to help investors and stock market speculators as well as short-term traders to avoid the big downturns in the financial markets and to profit from the major upturns. And therefore, in this week's video, I'm going to review some information that's presented on our internet website on a regular basis that'll keep you in tune with very, very easily and very quickly, only about 5 to 10 minutes at the most every week, in what's likely going on in the financial markets regarding whether or not the markets seem to be in the process of peaking or bottoming, or just whether or not we're at some key turning points in the markets. So now I'm going to go to our website and go over just 4 charts that'll keep you up with those important developments in the markets. This video is probably going to last only about 10 or 15 minutes at the most. So let's go ahead and go to our website now. Okay, so what we're looking at the moment is the home page of our internet website. And I encourage you to go to our website at least every Saturday and Sunday when we update some major charts to give you a good indication of what's going on in the markets and whether you should be allocating more money to the stock market or reducing your allocations to stocks. And really to go there on a daily basis, because we provide a ton of information on our site that really doesn't take much time to view and review. For example, on a regular basis, we provide comments on major economic developments, both in the United States as well as in other key regions of the world. We provide on a daily basis information on corporate earnings of publicly traded companies. Of course, that's very, very important. We provide information on important geopolitical developments, as well as information on just general news of large and closely followed publicly traded companies. But in today's video, we're going to focus on 4 key investment timing indicators and some charts of those indicators that we updated our internet website on a regular basis. And first, we're going to take a look at, if you take your mouse at any point in time when you're at our website, not just viewing this video, but looking to review our site. If you take your mouse and put it over Timing Monitor and come down to Buy-Sell Index, what you'll see is a chart of our Buy-Sell Index, which is an index that helps us to get in and out of stocks in general near major turning points. And really, that index is really meant to help us to get in and out of the market, not on a daily, weekly, or even monthly basis, but near peaks and bottoms. And if you look at this chart closely, and you could slow down this video or come back to it at a later date, you'll see that that index has been very, very reliable and helping both us and people that follow our advice and follow what's being told in these charts of when to get out of the stock market, when to get back in, or at least when to allocate a larger portion of your financial market to stocks and when to get mostly out of stocks. I mean, we had a buy way back here that you're not even seeing. I think it was in mid-2004, and we had a sell right here during we had a buy during 1994 and a sell during 1997. Now, stocks actually continue to move higher. By the way, this black line is a chart of the S&P 500 index, and these bars here are indicate whether or not there's a buy or sell reading on our buy-sell index. When these bars get up here in this area, that registers a sell. When they get down in this area, it registers a buy. And if you look at this chart, if you explore it and review it carefully, you'll see that it's not perfect. I mean, sometimes we get back into stocks at a higher price, but boy, it's very, very reliable. Here's a sell at helping us and others to get out near peaks in the markets. Here, where we had a buy, this was I think it was in January or sometime between January and March of 2000, right before the major U.S. stock market indices peaked. And here we got a buy. I think it was in October of 2002, or sometime between October 2002 and March of 03, right about the same time the stocks in general bottomed. And then we got a sell here in September of 2007, right before stocks around the globe collapsed. And then we got another buy. I think it was somewhere between February and March of 2009, right before stocks had bottomed. The bear market was ending and stocks took off. So I don't want to get into a lot of detail here. You can explore that on your own. But we update this chart once every month. And the only reason that we update it only once a month is because we're waiting for all of our data to come in to input into our tactical asset and sector allocation model, the model on which this buy-sell index is based. And but we do update our comments every Sunday, just stating what this chart is essentially telling us. Next, we're going to go to, that's really a chart and an index to help us and people that follow us get out of stocks and back into stocks near major peaks and bottoms. Next, we're going to take a look at our relative strength index. And this is an index that's derived from the price performance of stock market leaders. It's based on, at this point in time, it's based on the price performance of 46 leading growth and or cyclical stocks. That is stocks that have outperformed most other stocks since the most recent bull market began, which happened to have been in March of 2009. And what you'll find is that when this index peaks and turns lower, the stocks in general tend to turn lower. I mean, this here, for example, this peak in this index was during April of 2012. And if you go and look at the chart of the S&P 500 index, sure enough, it pulled back considerably during the ensuing weeks. I'm going to skip over here and just go to the most recent time that this index peaked. And it was in early August of this year. And if you look at the S&P 500, it hasn't moved substantially lower, but it has been, in fact, trending lower over the past several weeks. And of major concern, this buy-sell index broke through a key price support level just a couple of weeks ago. And that's a big warning signal, because my gosh, if the market leaders, the best performing stocks, are breaking down through key price support levels, that's suggesting that's a really good chance that stocks in general are probably going to move lower during the months ahead. And it's essentially telling you that you should probably reduce your allocations to stocks. So next we're going to take a look at our sector performance index. And this index is a more short-term oriented indicator, investment timing or market timing indicator. And if you were to look at this chart, of this index, it's been moving higher over the past few weeks. And that's essentially telling you what we say here when we update this information every week, that financial market participants have apparently gotten a little bit more optimistic about this regarding the short-term direction of stocks. So we might see a rebound over the next few weeks. Lastly, I'm going to go to our overbought, oversold indicator, which is a very short-term indicator. And if you look at this chart closely, the blue line once again is a chart of our indicator. The black line is the S&P 500 index. And you'll find, almost without exception, that every time that this index peaks and turns lower, especially when it gets to this overbought level, well, what happens? The S&P 500 moves lower. When it bottoms, the S&P 500 moves higher. You'll find that throughout here. And for example, this is once again early August when it peaked. Did not get to overbought level, but it did turn lower, and the S&P 500 moved lower. And then it bottomed just about 2.5 weeks ago, and sure enough, the S&P 500 and stocks in general have moved higher over the past few weeks. Very short-term indicator. But to go back now to our home page, and then let me just make a few comments to wrap up this week's Internet TV show. And that is, once again, our goal is to avoid the big downturns and to profit from the major upturns. And the reason is very simple. We have found that if you just avoid the big downturns, and you that's a key, but you at least are in the market for a lot of the upturns, but not even all the upturns. If you avoid the big downturns, you'll greatly increase your returns on your stock market investment. And we think of it in terms of, in a sense, as an analogy to the story that you've all heard about the tortoise and the hare. As you know, the tortoise always wins the race. The tortoise is much slower than the rabbit, but he's consistent. Whereas, in contrast, the rabbit jumps around a lot. He's very fast, but he's indecisive, and he doesn't have any strategy. And so what happens? The tortoise ends up winning the race, and that's our goal. We do recommend speculative stocks as well as income stocks and much more conservative stocks. But our goal is just to be patient and to avoid the big downturns and to profit from the major upturns. And what are the results by doing so if you begin to do that, if you're not already doing it? Well, I'm going to go back to our buy-sell index, and now I'm going to click on, once that loads, to here, click in here for a long-term perspective or a long-term chart of that buy-sell index, which you can, of course, look at on your own time, the buy and sell ratings on this index and the performance of the S&P 500. But more importantly, I'm going to move down to a chart here, and you'll see that this is a chart from December 1969 to December of 2014. So I really need to update this chart. But it's a chart of the S&P 500 index, a buy and hold strategy in essence, if you just stayed in at all times, which is what most of these so-called financial market advisors, stockbrokers, will tell you to do. Always stay in the market, because supposedly no one can time the market. And this green line, is a chart of the performance of an investment portfolio. If one had just gotten out near peaks in the market, that is when our buy-sell index registered a sell rating, and got back in when our buy-sell index registered a buy rating. Our tactical asset and sector allocation strategy. Our strategy to avoid the big downturns and to profit from the major upturns. And you'll see that over that approximately 45-year period from 1969 to 2014, that if you'd have just put $10,000 at one time in the S&P 500 index, well, that $10,000 on a buy and hold strategy would have grown to a little over $885,000. But if you avoided the big downturns and profited from the upturns, that is to follow the readings on our buy-sell index, that same $10,000 would have been almost double that amount, $1.5 million. And this chart we really need to update. I apologize, but this is from 1969 to December of 2011, based on the Boy, I might be looking at the wrong one there. My great apologies. Looks like I need to update these charts. But you'll see if you had put your money into a small cap growth fund, all in, when our buy-sell rating registered to buy and got out when it registered to sell, versus a buy and hold strategy that over that period from 1969 to 2011, the $10,000 in a buy and hold strategy and the S&P 500 index would have been $507,000, but in a small cap growth fund, getting in and out of stocks near key turning points following our buy-sell index, that $10,000, instead of turning into $500,000, it would have been more than $2 million. So, I'm going to wrap it up there for now. I think that's long enough of a video, but these are very, very important charts that I encourage you to go to on a regular basis, really on Sunday of every week. So I thank you for watching and listening. We record these videos, this internet TV show, on Saturday of every week and generally post it to our internet website on Sunday of every week. And I send an email to our subscribers on either Saturday evening or Sunday morning of every week, letting you know when our weekly TV show is ready for viewing. So thank you for listening. I hope you learned something, and I'll talk to you again next week.